GM released results before the market opened on Tuesday, and they were phenomenal. They were much better than I expected. I thought we'd at least see a little bit of margin pressure, but we had great growth from General Motors, which is, I think, just shocking. They increased their guidance again. I believe they've done that every single quarter this year. So I want to dig into the results and show what's working and what the company is expecting in the future. There was a lot of questions on the conference call about potential guidance for 2025, which GM didn't formally release yet, but they basically said that results are going to be about flat with 2024. Guess what? That's okay because GM's stock is trading for 5 times earnings. Management has bought back almost 20% of shares outstanding in the past year. There's a ton of tailwinds behind GM right now. That's what I'm going to dig into. My name is Travis Hoium. Thanks for watching Asymmetric Investing. Please subscribe here on YouTube for all my content. And thanks to this video sponsor, The Motley Fool. If you go to fool.com/ASYM, they'll give you their top 10 stocks to buy right now. Let's jump right into the results. I'm going to start with this slide that just shows the high-level numbers. $48.8 billion in revenue, $4.1 billion in EBIT adjusted, $5.8 billion in auto free cash flow. $5.8 billion for a company that's trading at a market cap just over $50 billion. They wholesaled 1 million units, and their EBIT adjusted margin 8.4%. They also increased their guidance for the year. They expect $14 to $15 billion in EBIT adjusted. That's up $1 billion. The entire range is up $1 billion. This is the big one that I think you should be paying attention to because the stock's just over $50 per share right now, but earnings expected to be $10 to $10.50 per share. Previously, they had expected that to be about 50 cents lower than that. This is that free cash flow number I was talking about. So a lot of the cost cuts that they put into place, a lot of the rhetoric around what they're doing with incentives, how they're giving less incentives than a lot of their competitors. So they're taking market share and they're taking that market share at a higher price. This is really what I think is surprising with GM. And at the same time, they're investing over $10 billion in capital expenditures in their battery joint venture. So at a really, really high level, GM is doing really well with these vehicles right here, full-size trucks and SUVs. This is where the money is made in the auto industry. Big trucks, big SUVs that have high price points and high margins. And GM is number one in full-size pickups, number one in full-size SUVs, 44% market share, and an astronomical 64% large SUV market share. For perspective, Tesla, who dominated the electric vehicle space, has less than a 50% market share in EVs today. So the most profitable segment in the auto business, full-size SUVs, GM has a 64% market share. Just phenomenal. On top of that, they are releasing new SUVs later this year, early in 2025. You got a Tahoe, Suburban, Yukon, an Escalade. There is also an electric Escalade that I think is actually out now. But these are expected to be lower cost, so they're taking a number of parts out, trying to simplify. That's really the theme of the business. Winning with simplicity is what they're calling it. But they should theoretically be lower cost, and they're new models, so management did say on the conference call probably be a little bit higher price point than the previous models. Again, those margins should be going up on the full-size SUV and truck side of things. Here's some of the other vehicles that are out. There's a new design for the Equinox. That is a very good selling vehicle. Chevy Trax has been very popular, very low price point, actually doing some pretty good margins there. Buick and Vista, don't sleep on the growth at Buick, and a number of others here. We also know, and this came out in the recent investor day, that GM is taking market share at a pretty rapid pace in electric vehicles. In the third quarter 2024, 9.8% market share in EVs in the US. So those vehicles are starting to really contribute to the business. Now, they have said that by the end of this year, they're going to be variable cost profitable. What does that mean? Well, you don't include your capital costs, so building out your buildings, your overhead costs, things like that. So basically just what are the parts costs? Can you put them together and sell them at a profit on those variable costs? Kind of a first step in getting the EV business to profitability. And again, they have some EV launches, the Cadillac Escalade IQ, Cadillac Optic, and Cadillac Vistic. They're obviously leaning into this Cadillac name. What they said is the higher end buyers are much more interested in electric vehicles than some of the lower end buyers. They are a higher price point typically. So that's why it makes sense to lead into the Cadillac name. So it'll be interesting to see how these things go. We are starting to see more Chevys also moving to electric. Super Cruise is another thing that I think investors are kind of sleeping on. Now, 280 million miles driven with Super Cruise engaged. The network has 750,000 miles in North America. This is basically like Tesla FSD. It's a level 2 autonomy system. You do have to be paying attention to the road, But GM is really catching up in a lot of ways with their Super Cruise system. This is going to be something that is going to be free for most buyers for the first 3 years typically. And then after that, there's going to be a small nominal fee. I believe it's $25 a month is what you can get it for right now. So not nearly as expensive as FSD, but nearly as capable. A lot of questions about Cruise. Didn't get a lot of answers about Cruise today. Expect that sometime in 2025, but they're getting back on the road. Expecting to be looking for new financing partners as well. We'll see what that looks like. GM doesn't need the cash, which I'll get to in a second, but potentially could be looking for strategic partners. Think maybe Uber might make sense to be investing in Cruise, but we'll see how that plays out. But I want to dig into the balance sheet and the buybacks. This is really the reason that GM stock, I think, could do really well over the next couple of years. Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/ASYM for the top 10 stocks to buy right now. I certainly think the upside, the big upside, the 10x, 100x potential for General Motors stock is going to be with Cruise. But that's kind of on hold for right now. That's more of a 5, 10, 15-year vision for the company. In the next couple of years, what's really going to drive the stock is management just simply buying back shares. So let's look at some of this information here because I think this really gets overlooked. GM operates with 3 segments and they're consolidating those segments into their financial results. So when you look at GM's consolidated balance sheet, it kind of looks terrible. And that's because GM Financial has $35.2 billion in short-term debt, $76 billion in long-term debt. It just looks like there's a ton of debt on the balance sheet. But that's not the way that this business should be analyzed. It should be looking at the auto business, Cruise, and then GM Financial. GM Financial is much more like a bank. They're going to take out loans and then offer loans to customers. They're going to have equity on the balance sheet, but they're going to have to generate return on that equity. So that segment should really be thought of as completely different. And it is a subsidiary of GM, but it is not the auto business. The auto business, look at this, $26.6 billion in cash on the balance sheet. How much debt is there? In total, there's about $16.7 billion of debt when you add the long-term debt and a little bit of short-term debt that you see here. So the balance sheet looks phenomenal. Management has said that they need about $20 billion in cash on the balance sheet to operate the business. You want to have a lot of leeway in the auto business. That's to buy inventory. It's to absorb any downswings in the market. But that means that they have excess $6 or $7 billion worth of cash. What are they going to be doing with that? They are going to be buying back stock. Management has said that by early 2025, they will be at 1 billion shares outstanding. Weighted average shares outstanding, 1.116 billion at the end of the third quarter. That's a weighted number for the full third quarter. That's down, 260 million from a year ago? So this is what management is doing with their excess cash. They're buying back stock. And remember I said earlier on, the stock is trading for about 5 times earnings. That is a phenomenal time to be buying back stock because if you just use all of your cash flow to buy back stock, you're going to buy back about 20% of your shares per year. In fact, in the past year, GM has bought back about 19% of their shares outstanding. So they could do another 20% over the next year. That will drive earnings higher. You're going to continue to have cash flow coming into the business. I think this is what's going to continue to drive the stock higher, even if the company isn't growing. But remember, they are growing right now. So you have revenue growth, you have share count falling, you have the company really well positioned in the most profitable segment of the auto market, and you have optionality with electric vehicles, which are growing and starting to potentially be profitable in 2025, and growth in Cruise. I think this is one of the best positioned stocks in the market today. It's why it's one of the biggest holdings that I have in the asymmetric portfolio. I know this is an unpopular pick, but GM is making money hand over fist while all of their competitors are resorting to discounting. Their sales are falling. Look at the comparison between GM's results today and Tesla's results tomorrow when those are released. I think that will tell you exactly who's operating from a point of strength. But let me know what you think about GM stock in the comment section below. Don't forget to subscribe to Asymmetric Investing. Thanks for watching, everybody. See you here next time.